Good afternoon and welcome to the webinar on entering past losses on piCalculator. My name is Andy Brown, the piCalculator trainer, and the purpose of this session is to show the range of different past loss types that can be entered into a claim and demonstrate how to enter these losses with examples of when they might be used. During this session we will look at the specific range of care, earnings, general and travel past losses, how to enter the relevant details for a loss, including timeframes, such as start and end dates, how calculations are displayed when produced from entering the loss details, selecting different options for the way losses are either displayed or calculated, including adding or excluding interest, creating alternative versions of an individual calculation, exporting an individual head of loss document into Word, and where to access further support for entering past losses on piCalculator. Please note that we will be looking at all past loss types, which of course may not be relevant for every claim. At the end of the presentation, we will leave time for questions. If you have any questions during the session, please submit them via the chat section by selecting the instant messenger icon at the bottom left-hand side of the Skype meeting screen. Please ensure that you have given your name and company in any message sent to us if you haven't already provided this information when you came onto the webinar. Note that any messages sent to us via the chat option can be seen by all those viewing the webinar. If you wish to send us a more private message, email us on piCalculator@verisk.com. We will be monitoring this email address during the webinar. If you have any audio or visual issues during the session, we have provided you with an attachment in the chat section called Troubleshooting on Skype. All webinars are recorded and will be distributed following the end of the session. If you want previous versions of webinars, please email us on piCalculator@verisk.com. So now we will move to the platform. I have set up a claimant prior to this session, and if you want a reminder of how to create a claimant on the platform, please refer to the Add New Claim video in our Help section. We'll be looking at the Help section in more detail later. As I said in the introduction, I will split the past losses into general, care, earnings, and travel. So the first losses we will look at are general losses. To start a loss, create a head of loss by selecting past losses from the main view and then click Add New Head of Loss to create a new head of loss title, in this case Vehicle Recovery, and add loss. If necessary, you can create a section title and then add some narrative for this section by selecting the pencil icon on the narrative line, and then type or copy and paste text into the box. So I've got some that I prepared earlier. If you're going to paste from another document, we would suggest that you use Ctrl-V to paste the text into the box. Remember to save and close if you have added any narrative. To add the loss for a general one-off, select Insert New Loss towards the bottom right of the screen. And from the drop-down list in the Type field, select General One-Off, which is the default option. You can provide a description for this loss here if you wish, particularly if you haven't added narrative earlier, but it's not a requirement. Leave the default date of loss as the date of injury if this is correct, or provide the actual date of loss. Enter a loss. in this case £150, and then save and close. The calculation shows on the screen with interest added. Rest your cursor on the green circle to see the explanation of the interest calculation. However, if you didn't wish to add interest, make sure that you select the exclude interest box, and then you'll see that the interest has been removed. We'll now move on to the general continuous losses, and first we will need to create a head of loss. An alternative way to create a past loss without having to go back to the main view is to choose past losses from the left-hand menu and then select add new loss. Our head of loss could be train journeys. In this case, they are not travel losses, as travel losses are for car journeys, which we'll look at later. When we have our head of loss page, select Insert New Loss, and from the drop-down list choose General Continuous. In the description field, we can say that this loss was to see a consultant, trips to consultant in London. During the period between the date of injury and the date of calculation, there were 7 trips, but they weren't at regular intervals. The cost of the journey, each journey, was £10. In the recurring field, we'll enter 7 and select for the frequency over the period, and then save and close. The calculation is then a simple sum of multiplying the loss by the number of times the journeys took place, in this case 7 times 10, which gives a calculation of £70. The final general loss we'll look at are the general periodical losses, and as with our previous general loss, we will create a head of loss from the left hand menu. Our head of loss this time is hire car. And add loss. Once we have our head of loss page, we go to Insert New Loss, choose from the drop down General Periodical, and in the description we'll put that it's a replacement car hire for 10 months. The hire car was required for a period after the date of injury, so leave the start date as the date of injury, but enter the shortcut of plus 10 months, plus 10M as the end date. And this allows you not to have to put in specific dates if the information supplied is not exact. The cost is £1,000. This occurs every 3 months. Save and close. And we'll see here that the number of purchases required over the period are 4 purchases, therefore £4,000 with interest added. Now we move on to past care losses. There are 3 separate loss types in care: one-off, continuous and continuous split. And we'll start by creating a head of loss called care. And add loss. So our first loss will be the care one-off, which would just be a simple individual loss. In the description, we will say that it was agency care. We'll put in a specific date of the 1st of the 8th, 2018. We'll say it was for a full day, so 24 hours. We'll specify our own rate of £25 per hour. We will not add a discount for gratuitous care, and we will save and close. And the calculation is displayed here, £600 plus the interest. Where you might have care by the family over a period of time, this can be calculated to take into account care rate changes during the period between the date of injury and the date of calculation. So this will be a new loss within the head of loss called care, and we will select care continuous as our loss type. In the description, we'll call this family care, or care by family even. We'll use the shortcut of +2W to reflect that the care might have started after an initial stay in hospital of 2 weeks. And the calculation will go through to the date of calculation. The time for this loss will be 12 hours, and then in the field next to it we choose the frequency. Now we're going to say it is per day, but note that other frequencies, including a specific day of the week or weekends, are possible. The rate to use field we will choose from one of the rates given here, which of course are from the list taken from the NJC care rates that form the basis of facts and figures. We'll choose aggregate rate. This time we will enter a discount for gratuitous care of 25%. And then save and close. Note that the calculation is displayed over 3 lines to reflect the care rate changes on the 1st of April. So the first period is through to the end of March 2018. Then we have the full period from the 1st of April 2018 to the end of March 2019. And the third line is from the 1st of April 2019 to our calculation date. Note also that the discount of 25% is applied, and so the calculation is shown as such in the value column. Now, it might be that the care that the family undertook is in different blocks of time during the period, and we can show this in the calculation using the care continuous split as our loss type. So that we don't have a duplicated care loss, I'm going to delete the original care continuous loss that we've just done. So to do this, we go to the red icon, which is delete loss, and confirm the message to delete. Then insert new loss and choose the loss type as care continuous split. Again, we will assume that this is, we'll give it the title of family care or care by family. And we'll say that the care started 2 weeks after the injury, choosing aggregate rate with a 25% discount for gratuitous care. The loss count relates to the number of periods of care. The default is 3, but you can choose between 1 and 30 periods. We will use 3. In the first box where it says description, we will put P1 representing period 1, which will say lasted for 3 months. So we enter the shortcut +3M. The hours are 10 hours per day, but note again the other frequencies that can be selected. In P2, period 2, we don't need to give a start date because it follows on immediately after the end of period 1. We'll say that period 2 is for 6 months +6M, and the amount of care has reduced to 8 hours per day. In the final period, period 3, the default end of this period is date of calculation because we asked for 3 periods, but if the care stops before the date of calculation, enter in the appropriate date. The amount of care for period 3 is 6 hours per day. And then save and close. The calculation is now divided into separate sections, in this case 5 sections. The first period, or the first section, covers the first period and describes the calculation with the rate and the discount. The second reflects the change of hours from 10 to 8 hours, and the third section represents when the care rate changed on the 1st of the 4th, 2018, and so on. Now, one new feature of the platform is to be able to change the details of a calculation and be able to compare this new calculation against the original. The care continuous split is a good example of this. We could imagine that after we've done the calculation, the care expert comes back to us and says they've reassessed the details. Perhaps the second period has been changed. So to do this, we select the Edit Loss icon, which takes us back into our calculation. And perhaps what we'll do is we'll change period 2 from 6 months to 8 months. And then select Preview. We can review the calculation now. The original stays on the screen, and underneath we have the proposed calculation in the blue italic. This can be very useful while you're waiting to decide which version to go with, or as part of negotiations. When you're ready to accept or reject, select the green icon to convert to current, or the red icon to delete the proposed calculation. If you convert this calculation, it will replace the original. So there is our new calculation. The preview option is available for any individual calculation, whether in general damages, past or future losses. So we'll leave care losses there and we'll move to earnings losses. There are 5 different earnings past loss types: earnings, earnings ASHI, earnings payslips monthly or payslips weekly, and monies received. And we'll look briefly at these. We'll start off by creating a head of loss, which we'll call earnings. And insert new loss for our first loss. We'll change our loss type to earnings. Earnings in our description. For ease of calculation, we'll keep the loss dates as date of injury to date of calculation. And in the earnings field, put £2,000. We'll say that was £2,000 per month. And we can choose that this calculation is done either at net, gross employed, or gross self-employed. We'll choose gross employed. You can also select the working days. Required information has been entered. Select Save and Close. The calculation is displayed in 3 sections, which reflects the tax years. And in the calculation settings at the top in Edit Key Facts, we had selected that we wanted to see gross tax calculations in a detailed format. So let's have a look at how this calculation has been worked out. £2,000 per month gross is £24,000 per year gross. And taking into account personal allowance, taxable income, basic rate and national insurance, we're left with the net figure of 19,599. The accident occurred partway through the tax year in August 2017, so this net amount is prorated into the calculation column, hence we get the figure 13,132. The second amount, 19,701, is the full net figure for the tax year 2018-19. And our final figure, 15,488, has been prorated from where we are currently in the tax year 1920. Add the three figures together and you have the subtotal of 48,321 plus the interest with final total of 48,617. Now, there is an alternative way of calculating past losses if you don't yet have somebody's earnings information, and that is to do an ASHE calculation. ASHE standing for Annual Survey of Hours and Earnings. This is data collected by the Office of National Statistics and can be used, as I say, where earnings information is not yet known. ASHE calculations can be used for both past and future losses. I'm going to delete the previous earnings loss and insert new loss and choose from the drop down Earnings ASHE. Going to use the same dates for our loss, date of injury to data calculation, and then filter the list of jobs in the ASHE code field. If I start typing in the filter box the term retail, all the different jobs that match that term are shown, and I'm going to select 7111 Sales and Retail Assistants. There are a number of different tables within the table. There are a number of different tables within the ASHE tables which I can choose. I would suggest that you choose annual pay gross. I can also choose the relevant data set. I'm going to choose the most recent one, 2019. To narrow down the specific data that matches the individual, I can select the relevant group, in this case, male full-time workers. Then select the refresh button. And what's displayed on the screen are the results from the survey. First of all, it shows the number of individuals in thousands whose records are within the survey. There's also a median and a mean salary figure provided, and salary levels against the different percentiles from 10th to 90th percentile. Based on the limited information I might know about the claimant, that they are 37 years of age and have worked in retail for 20 years, I can choose any of the salary levels displayed that I think are appropriate, and this will be the amount that goes forward to the calculation. So that figure is dropped down into the earnings box. I will leave the rate as being an annual figure and choose this as a gross employed calculation. And then save and close. As with the previous earnings calculation, you can see how the gross figure takes into account the personal allowance, the taxable income, the basic rate and the national insurance, and proratas the net figure into the calculation column. So we now move on to another option within earnings, and this might be done after you've done an ASHE calculation, that you then receive payslips information for the claimant. And I'm going to edit the ASHE calculation to show a comparison between the original ASHE figure that we put in and the payslip calculation. So I use the pencil icon to edit the loss, change the type from Earnings ASHE to Earnings Payslips Monthly. This will require me to enter 3 months of payslips, but if the payslips weekly had been selected, I would need to put in 13 weekly payslips. I'll keep the same start and finish date for the loss, and then I will enter the 3 months of payslips. Now they don't need to be concurrent, although I will be putting concurrent figures in, but they should be before the date of the injury. So my first date is 31st of the 5th of 2017. My second is 30th of the 6th, 2017, and my final one is just before the accident, 31/07 2017. The figures that I enter in here will be the net figures from the payslips, but they might be reflecting different amounts because of overtime or shift payments. So I'll put in figures of £1,600, £1,800 and £1,700. And then select preview so that I can compare against the original ASHI calculation. So I can see there's about a £5,500 difference between the two. Before I convert the payslips figure to the actual amount to go into the schedule, it might be that I want to capture this view that compares these two totals and that I can revert to at a later stage should I need to go back to what we had originally. To do this, you would create a snapshot of the claim at this stage. If we go to the overview over on the left-hand menu, and in the management section, select Manage Snapshots, create a new snapshot, and provide a title if I want to, which might be ASHI versus payslips, and create new snapshot. I'll then close that and go back to my earnings loss and select Convert to Current, which will override the ASHI calculation. There we are. However, if later I want to go back and look at what the original calculation was compared with the payslips, if I go back to Overview, to Manage Snapshots, and go to the green pencil icon that says Open Snapshot, I'm now in a read-only or view-only version of the claim where I can scroll down, open up my earnings head of loss, and there is my comparison. So I can't make any changes to this version. It is only read-only. There are a couple of options at the top here. I can make a live copy of this snapshot, which becomes a claim in itself, and I would find that through my Your Claims view. But I can also return to the claim, which is the live version. The final earnings related loss is not technically a loss. The monies received calculation allows you to show where someone has received money during the period of loss, for example, sick pay or a phased return to work. So I'll go back into my earnings head of loss and insert a new loss and choose monies received. In the description, I'm going to put part-time return to work. The receipt count is used to show how many payments are to be included. If, for instance, a claimant went back to work part-time a year before the date of calculation, you could choose a receipt count of 12 and enter 12 separate payslips, or choose one and enter a P60 amount. I'm going to enter a single 1 month part-time return to work for a single month of the 31st of the 8th 2018 and a value of £800, and save and close. So our earnings head of loss has two figures, the payslips calculation here and the part-time return to work of £800, which is in brackets, therefore a minus figure. So it's 49,980 minus 800 gives us a new subtotal of 49,180. This can be a very useful way to show a true loss of past earnings, where an individual may have been in and out of work in the period from injury to calculation. We'll now move on to travel losses, which, as indicated earlier, cover expenses incurred by car journeys. There are two types, travel one-off and travel continuous. So first of all, we create a new head of loss, which we're going to call trips to hospital. And add loss. Insert new loss and choose travel one-off. In the description, we're going to say this was an appointment to see a specialist in London. The date of this was the 15th of the 4th, 2018. The distance is 50 miles each way. The rate is 45 pence per mile and a parking cost of £5. And then save and close. So a simple calculation is displayed. Now, were there to be regular journeys being made by car, this can be recorded as a continuous loss. So insert new loss again, choosing our loss type as travel continuous. In the description, we might put in twice monthly visits to clinic for 6 months. The loss started a month after the injury and lasted for 6 months. Plus 6M. Distance this time is 10 miles overall. The rate is 45 pence again per mile. Parking cost £4 each journey. And where it says recurring, we'll put 2 times per month. And then save and close. Now it might be that we want to export this particular head of loss to share with colleagues without necessarily exporting the full schedule. So to export a head of loss, come to the export head of loss option on the left-hand menu. In here we can select any of the options we want to include in our when we export the document, which might include our proposed calculations in blue italics, should we have any, and then select export. The document that is then produced is a simple Word document with no front page as seen in the full schedule. The final loss that I want to show you today is the TBC, to be confirmed loss. And this would be where you might want to put in a head of loss so that it appears in a schedule, but are still awaiting the details for that specific loss. So to create we create first of all a new head of loss, which we'll call case management. And add loss. Insert new loss. Choosing the loss type TBC, which only then requires you to provide a description, and even then that's not mandatory, but we'll call it case management. Save and close. When details are known now of the case management, assume we're back in the overview of the claim, find our head of loss case management, and edit the loss, changing it from TBC to whatever is going to be the relevant loss type, enter in the details, and then select update to create the calculation. So to finish the session now, we're going to look at the help resources. We've already had a quick look at them earlier. So in the help resources, you can see these video tutorials. They're specific YouTube clips, and of course we have one on how to add past losses. If you cannot access YouTube, please let us know and we'll send you alternative links. Past losses are also covered in the user guide that you can download and print should you wish to. Finally, you can select RebMark Help to contact us for further support, send us a message in the platform, or email us, or give us a call, and we'd be more than happy to offer you further support. So that closes the formal part of the presentation, but we'll now turn to questions that you might have been submitting during the session. All right, I understand there are no further questions, but please do keep in touch with us. If you do, anything comes to mind after we've finished, please do send it to us at piCalculator@veris.com. So thank you very much for attending today, and we look forward to sending you details of the next webinar, which will be on future losses at some point in February. So thank you very much for today. Goodbye.